What if I told you that many millionaires didn't become rich by picking winning stocks? They didn't spend hours studying charts. They didn't predict the next big company. And many of them didn't even try to beat the market. Instead, they used something so boring, most people ignore it. And yet, this boring strategy quietly creates millionaires every single year. That strategy? Index funds. Today, we'll break down exactly how millionaires use index funds to build serious wealth, even if they start with an average income. And by the end of this video, you'll understand why the rich choose simple over complicated. Don't look for the needle in the haystack, just buy the haystack. That one idea changed investing forever. Let's begin. Most people believe becoming rich requires starting a huge business, becoming famous, finding the perfect stock, getting lucky. But real wealth often comes from something else. Consistency? Research by Thomas J. Stanley found something shocking. Most millionaires don't live flashy lifestyles, they drive normal cars. They avoid unnecessary spending, and they invest consistently for decades. Wealth isn't always about earning millions. Spending less than you earn, investing regularly, letting time do the heavy lifting. Simple? Yes. Easy? Emotionally? No. Humans love excitement. Boring strategies don't feel exciting, but boring often wins. Let's simplify this. Imagine there are 500 large companies in America. Apple, Microsoft, Amazon, Nvidia. Instead of choosing just one stock, you buy tiny pieces of all 500. That's basically an index fund. An index fund tracks a market index, such as the S&P 500. So when the market grows, your investment grows too. This gives you something powerful. Diversification. If one company crashes, no big deal. You own hundreds of others. This reduces risk. Millionaires love index funds. The goal isn't excitement, the goal is wealth. Beginners think, I need the next Tesla. Millionaires ask something different. How can I grow money reliably? Low fees. High fees destroy wealth. Fees quietly steal money. Index funds have low expense ratios. More money stays invested. More compounding happens. Daniel Kahneman said, humans think they can predict markets. Usually they can't. Emotions ruin investing. People buy when prices are high. People panic when prices crash. Index fund investors automate. Automation beats emotion. They capture market growth. Economies grow. Businesses innovate. Productivity improves. This is where wealth explodes. Compound interest. Your money earns returns. Then those returns earn returns. You invest $500 per month. Average return 10% after 10 years. Around $100,000 after 20 years. Around $380,000 after 30 years, around $1.1 million. Time multiplied your money. Millionaires start early. Time is the biggest advantage. Not intelligence, not luck, time. A 25-year-old investing modestly may outperform a 45-year-old investing aggressively. That's the power of compounding. Let's talk about the mistakes. Mistake 1, waiting for the perfect time. I'll invest when the market crashes, but what if it doesn't? Years pass. Money sits idle. Time in the market beats timing the market. Mistake 2, chasing hot stocks. Today it's AI stocks. Tomorrow crypto, next month something else. Trends change, hype changes, human greed doesn't. Many lose money chasing hype. Millionaires avoid gambling disguised as investing. Mistake 3, panic selling. Market drops 20%, beginners panic, they sell, then markets recover. They miss the rebound. This cycle destroys wealth. Millionaires expect crashes. They don't fear them. They prepare for them. That requires discipline, and discipline creates advantage. Here's something surprising. When markets crash, many millionaires get excited. Why? Because assets are cheaper. Imagine your favorite product goes on sale. You buy more. Why should investing be different? When markets fall, index fund investors keep buying. Sometimes they buy even more because downturns are temporary. Long-term wealth is built by staying invested, not by running away. That requires discipline. The millionaire formula. Here's the formula in simple words. Earn money. Spend less than you earn. Invest consistently in index funds. Reinvest gains. Ignore noise. Stay patient for decades. That's it. No magic, no secret stock tips, no overnight wealth, just patience. Most people overestimate what they can do in 1 year and underestimate what they can do in 20. The rich understand delayed gratification. They plant seeds today, knowing forests take time to grow. Ask yourself, will you chase excitement or build wealth quietly? Millionaires know something powerful. Sometimes the simplest strategy is the most profitable. Simple beats complex. Complex strategies confuse people, but simplicity creates clarity. Wealth is often boring, but boring works. Consistency wins again. Small actions matter. Tiny progress compounds. One step becomes many. $1 becomes hundreds. Hundreds become thousands. Thousands become millions. This is slow wealth. Slow wealth lasts longer. Fast money disappears fast. Patience filters out emotion. Discipline protects wealth. Knowledge builds confidence. Confidence reduces fear. Fear makes people sell. Confidence helps people hold. Millionaires think long term. They focus on decades, not daily noise. Their mindset is different. They think like owners, not gamblers. Millionaires don't chase shortcuts. They trust proven systems. Wealth building is a process. Process beats prediction. Prediction is difficult, especially in markets. Even experts get it wrong. That's why diversification matters. Never depend on one stock. Spread risk intelligently. Risk can't be removed, but it can be managed. Rich people understand risk. Poor decisions destroy portfolios. Good habits build portfolios. Habits matter more than motivation. Motivation comes and goes. Systems stay. Automation removes friction. Automatic investing creates consistency. Consistency creates compounding. Compounding creates wealth. The first years feel slow, very slow, almost invisible progress. Many people quit here. That is the mistake, because exponential growth comes later. Slowly, then suddenly fast. Patience unlocks this phase. Market crashes are normal. Crashes are not the end. They are temporary. Recovery follows panic. Every crash feels different, but human emotion stays the same. Fear, panic, regret. Millionaires control emotion. They follow rules. Rules reduce mistakes. Mistakes are expensive, very expensive. One panic sell can cost years. One disciplined buy can change decades. Small decisions matter. Daily choices shape wealth. Wealth starts in the mind before it appears in bank accounts. First mindset, then money. Rich people think differently. They delay gratification. They think long term. They trust compounding. They trust patience. Patience is rare. Rare traits create rare wealth. Most people want fast results. They want wealth now, but wealth rewards patience. Slow is powerful. Speed creates mistakes. Slowness creates clarity. Clarity improves decisions. Better decisions build wealth. Wealth is built layer by layer, like building a house. Strong foundations matter. Savings is the foundation. Investing builds the structure. Compounding builds the roof. Without savings, investing becomes hard. Income matters, but behavior matters more. High income doesn't guarantee wealth. Bad habits destroy wealth. Good habits multiply wealth. Rich people pay themselves first before paying others. This changes everything, because investing becomes automatic. No willpower needed. Systems reduce stress. Stress causes bad decisions. Calm creates better judgment. Millionaires stay calm, especially during chaos. Chaos creates opportunity. Opportunity rewards courage. Courage isn't gambling. Courage is disciplined action. Buy when fearful. That feels hard because humans fear losses. Loss feels painful, very painful, but temporary losses aren't permanent. Selling makes losses real. Holding allows recovery. Recovery needs time. Time heals markets and rewards patience. Patience is profitable. Boring can be profitable. Excitement often costs money. Noise distracts investors. Ignore noise. Focus on fundamentals. Fundamentals rarely change overnight. Markets move daily. Wealth grows yearly. Think in years, not hours, not minutes, definitely not seconds. Millionaires zoom out. They see the bigger picture. Small dips look scary up close, but tiny from far away. Perspective matters. Mindset matters. Habits matter. Discipline matters. Time matters most. Time creates compounding. Compounding creates freedom. Freedom changes life. Financial freedom means choice. Choice creates power. Power creates peace. Peace is priceless. Money is a tool. Use it wisely. Don't worship money. Make money serve you. That is true wealth. Wealth buys time. Time is life. Protect your time. Protect your money. Protect your mindset. Because mindset drives action. Action drives results. Results create confidence. Confidence builds momentum. Momentum builds wealth. Keep moving forward. The journey doesn't end here. Wealth is a lifelong game. The winners stay consistent day after day, month after month, year after year. Progress feels small daily but huge over decades. Most people quit too early. Don't be most people. Stay in the game. Staying invested matters. Missing big days hurts returns very badly. A few great days change everything, but nobody predicts them. That's why staying matters. Discipline beats prediction. Always millionaires know this. They avoid emotional traps, fear, trap, greed, trap, FOMO trap. Emotional investing destroys returns. Logic protects returns. Follow your plan. Trust the process. Good systems outperform emotions over and over. Simplicity Complexity scales, complexity breaks. Keep investing simple. Simple is sustainable. Sustainable wins. Wealth, rewards, consistency, again and again. Tiny investments matter, even small amounts. Start with what you can. Start now, not someday. Someday delays wealth. Today creates momentum. First step matters most because starting beats waiting. Action creates change. Waiting creates regret. Regret is expensive, very expensive. Think decades ahead. Where will you be in 10 years? In 20 years? In 30 years? Future wealth starts today. Every contribution counts. Every month matters. Every year matters. Every decision matters. Build your future self. Your future self will thank you. Millionaires think ahead. They think strategically, not emotionally. Strategy creates advantage. Advantage creates wealth. Wealth creates freedom. Freedom creates options. Options create peace. Peace is the real luxury. Not flashy cars, not expensive watches, not status. Real luxury is freedom. Freedom to choose. Freedom to say no. Freedom to live well. That is the goal. Not just money, but a better life. Money should support life, not control it. Be the master. Your future wealth starts now. Click, subscribe, and start building wealth today.